This is going to be a very unusual show today. You'll have to let me know in the comments below whether it was okay with you, or it's not going to be a normal way for me to approach things, but I couldn't figure out any other way to take care of Cathie's report than to more or less read it to you. Now, that doesn't mean I'm not going to stop and give commentary from time to time, but I've taken out what I consider be the important chunks, the things that will be most interesting to you in this community. But if you want to read the whole thing, I'll absolutely put the link in the description and you can check it out and read the whole thing along with all their charts and graphs. And I love Cathie Wood and I love ARK Invest, but their charts and graphs are not always as good as, say, for instance, CERN's. They need CERN to prepare their charts and graphs to make them more visually interesting. Anyway, let me go ahead. And here's what Cathie had to say. She says, I'd like to share with investors research about a world that we're about to inhabit, a world transformed by the convergence between and among various technologies, the seeds of which were sown in the 20 years that ended at the turn of the millennium. I don't know which, millennium. ARK's analysts and I have been researching, discovering, understanding, and drawing inferences from the way in which these seeds have germinated and are now flourishing. Now, you may or may not know that Cathie takes a look at the world kind of through the pre-2000, after 2000 situation, and it's not a bad way to look at things. We had all these companies that were growing the foundational parts of the internet and things related to the internet during the 90s and even before the 90s. And then we had the complete blow up, the bubble popped on the internet explosion that was taking place in the 90s. And we had a real significant sell-off, including a lot of bankruptcies of companies that seemed so promising. And but it was not really the end of the world. They had sown the seeds, they had created the foundation, and starting in the 2000s to the 2010, you saw many new companies coming in, taking advantage of those building blocks, and the companies that survived, like Amazon and others, started to really accelerate and do well. So that she's talking now about what's happened in that 20 years that has now set the stage for what you've heard me call the AI bot era. I don't know if that'll catch on or not, but if it does, I get credit. All right, here we go. She says, technoeconomic discontinuity is a process. She's going to define that now. Technoeconomic discontinuity is a process whereby technological breakthroughs create sudden and unprecedented transformations. Such discontinuities occurred during the second industrial revolution after the introduction of the internal combustion engine. We had electrification, telephony. We had so many other things. We had the beginnings of the movie industry. We had the road system that was built. It just went on and on and on. All the things that came about as a result of what was going on in that period. We believe that a similar, unprecedented technological boom is now underway. Five major technological platforms are breaking new ground. Artificial intelligence is permeating every sector and cognitive task, accelerating productivity across all industries. Electric vehicles, enabled by breakthroughs in energy storage, those are two, are now as affordable as an average new gas-powered car. Robots, like reusable rockets, drones, sidewalk delivery vehicles, and of course, humanoids, are proliferating. Astounding advancements in multinomics have pushed far beyond just DNA, aligning genomic, epigenomic, transcriptomic, proteomic, and phenotypic information to unlock the codes of life, health, biological systems, and death. We're not going to dig deeply into the health consequences of what she's talking about. That would be for another day or for something that you could look up on your own. I'll put that information again below. Public blockchain, spurred by the emergence and adoption of Bitcoin, are primed to expand the monetary and financial landscape, wresting fundamental financial functions away from the traditional financial ecosystem. That's a subject that would not be for me to even get into. This discontinuous set of changes has just begun. She says technological convergence is the process by which discrete technological capabilities coalesce and catalyze new ones. The emerging convergences should shape the next set of technological discontinuities. So I've been talking about this a lot in terms of how the robot requires, you have to have small batteries, lightweight batteries, in order for that last a long time for the humanoids to work. You've got to have the ability that you now have with regard to the full self-driving software or some kind of software to enable through artificial intelligence now to enable the robots to be as effective as they're going to be. So these are the kind of things we're talking about. At ARC, we identify 5 innovative platforms: public blockchains, multinomic sequencing, energy storage, robotics, and artificial intelligence as the areas of technological foment, creating the most meaningful convergences today. They are the emerging general purpose technologies that we believe will transform and accelerate economic growth. And it wouldn't take you a minute to think about how the artificial intelligence impacts all of them, but then you could also see a lot of overlaps between these various categories in terms of how they're impacting each other. Our research suggests that these 5 technology platforms are poised to converge, causing step changes in productivity and economic growth that could generate trillions of dollars in market value by 2030. Together, they are likely to transform the techno-economic landscape more profoundly than did the second industrial revolution. In fact, our modeling also suggests that these technologies will account for about 60% of all risk asset value. So right now, we've got these 7 or 8 or 9 companies that are representing a huge amount of the risk asset value in the Standard & Poor's right now. She's saying that these companies that are involved in this business will be representing 60% of all risk asset value. The equity of capital is and generate most of the incremental appreciation in equity market capitalizations over the coming business cycle. She says, importantly, because of the speed, now listen to this, because of the speed at which these changes are taking place, traditional benchmarks are unlikely to incorporate them in a timely way. Just like we're seeing with Tesla, just like we're seeing nobody paying any attention to the robots at all, barely paying any attention to the battery storage, hardly paying any attention to the self-driving vehicles and or robotaxis. In all of those 4 sectors, the market is not getting it. And she's saying this is going to be a continuous theme for the next 10 years. In other words, the market will be far behind in each of those areas. Traditional forecasters expect real GDP to reach 130 trillion in 2030 and 160 trillion by 2040, or about $15,000 and $18,000 per person, respectively, worldwide. Interestingly, they expect the global growth rate to decay consistently over the next 2 decades. Why? Who knows? In contrast, thanks to technological-enabled disruptive innovation, we believe that real GDP growth will accelerate. If we are correct, real GDP could reach 170 trillion, not 130 trillion, and 470 trillion in 2040, not the expected, what was it, 160 trillion instead of 160 trillion. She's talking 470 trillion by 2040. Okay, so that would mean 2030 per capita GPT 33% higher in real terms than consensus expectations. Now, this is important, as I've mentioned before. I'll mention it again. I'm sure I'll be talking about it a lot over the next months. Is this technological convergence that's taking place? Some people argue about Ronald Reagan's idea of a great economy lifts all ships. It does lift all boats or all ships. It absolutely does. There has never been a time in history that the poor were more wealthy, okay? We've never had a time in history when we've had nobody, basically worldwide, that has a hunger problem. There's very few people that have a shelter problem. It is such small numbers. It's not even that. The only reason people are hungry right now is because they're living in a dictatorship someplace where the people that are running the show are making sure that people don't get to eat. North Korea comes to mind. All right. Prior to the discovery, this is so fascinating right here. Pay attention to this. Prior to the discovery and proliferation of writing, the global economy was anemic, with a growth rates below 0.04 in the 100,000 years prior to the rise of Rome. Okay, so I'm not necessarily going to agree that there was 100,000 years of human history prior to the rise of Rome, but we'll give her this. Okay, in the first 1,000 years AD, annual growth accelerated nearly fourfold to 0.14%. We're still talking about a fraction of what we expect the economy to grow every single year. Then plow technology and crop rotation strategies into, I'm sorry, not plow it in. Then plow technology and crop rotation strategies led to a population boom, more than doubling growth to 0.3% at the annual rate around 1,500. Still 0.3% compared to any time it gets under 1.5 in the United States, we think it's a crisis. The printing press and the steam engine bookend the first industrial revolution, doubling growth again to 0.6% per year through 1900. Thereafter, electrification, telephony, the internal combustion engine, digital computation, and connectivity quintupled real economic growth to roughly 3% worldwide annual rate of growth, pushing global GDP to 107 trillion. And as a result of that, global real per capita GDP has increased nearly sevenfold since 1900, from less than 2,000 to more than 13,400 in 2023. I just encourage you, if you don't travel much, go ahead, do a little travel. Do a little travel in China, do a little China. I haven't been to India or China. I've been to Hong Kong. I've been to that city that's right across the bay from Hong Kong. You know, the people there don't live that bad. And it's been a long time since I was there. It's much better today. I was in Singapore, saw a lot of folks from Indonesia while I was in Singapore. The amount of activity that's happened in countries like South Korea, even Japan, Singapore. I mean, these places were bombed out shells. There was nothing there. Singapore, for 400 years, there was nothing there because anytime something might look like something, they would go to war again and they'd lose it. So what's happened in Singapore, it's one of the most modern cities in the world. South Korea might be the most modern city. Japan, Tokyo, it's crazy to go to Tokyo and you get up on top of a tall building and you cannot see the end of the skyscrapers. Anyway, and 70 years ago, there was nothing there. Indeed, our modeling suggests that neural networks will catalyze, wait a minute, yes. Indeed, our modeling suggests that neural networks will catalyze a range of technology offerings, each of which independently could qualify as amongst the most economically meaningful in history. That's another great line. Somebody should write these down. Oh, yes, you did. We believe that the economic impact of adaptive robots, autonomous mobility devices, and AI software will each compare favorably with the steam engine as an example, which she says the steam engine was the number one most important of all the things that we can look at, the written word, the printing press, etc. That her understanding of history is that the steam engine triggered the most activity of any of these. The market impact should be even more dramatic. While the steam engine transformed the British economy over 80 years, neural networks and AI software could impact every facet of global activity over the course of 1 decade. Not 80 years, not 40 years, not 20 years. You know, we've seen the last 70 years, I mentioned those 3 cities, but there's many other examples that could be given. But if you go around the world, the comparison of 70 years ago to today is absolutely astonishing in terms of places that were completely impoverished. And now everybody has shelter, everybody has a meal, and pretty much everybody has a cell phone. Okay, the aggregate convergence scoring indicates that an acceleration in neural networks would have the most meaningful impact of our overall value accrual expectations. Evidence suggests that neural networks are accelerating more quickly than many have even expected. Oh yeah, by a lot. The graph below shows, I don't have the graph. Okay. She says competitive forecasters' expectations have suggested that the AGI would become available in like 70 years. If expectations were well-tuned, the estimates would decline gradually, but the capabilities of the product releases clearly are catching forecasters off guard. Expected time to AGI fell from 3 decades in 2021. Just 3 years ago, people were saying AGI would come in 3 decades, and it's now, and then it went to 18 years the next year, dropped in 1 year to 18, to less than a decade after the release of ChatGPT 4. Now, lots of people, including Elon Musk, I'm adding this in myself, Elon Musk is saying by 2029, and other people are saying the same thing. Using forecasters' expectations on a weaker benchmark, we estimate that prior to the mid-2020 release of ChatGPT 3, forecasters would have thought AGI was more than 80 years away. The future is going much faster than anybody expected. Advances in natural language AI are increasing the capability of robotaxis. Neural networks should increase the total addressable market of autonomous mobility by 10-fold or more. Put simply, advances in large language models that have captured the world's attention translate directly into the advances in autonomous mobility software, and of course, robots as well. For example, now, you know she's a big fan of FSD. She believes that Tesla's valuation will go to $2,000 or more per share once FSD is solved and robotaxis start up. She says, for instance, Tesla's full self-driving FSD system understands intersections by relying on the same transformer architecture that enables GPT-4 and other language models. Further, Tesla is incorporating the not only state-of-the-art image generation diffusion models to process data from its cameras, but also reinforcement learning, once thought a dead end for neural network capability, but now used to train ChatGPT, and now to develop its autonomous taxi system. In other words, advances in the state-of-the-art neural networks are increasing the capability and scalability of Tesla's autonomous mobility systems. Now I'm going to take umbrage with her at this point, because actually Tesla was developing this same kind of capability simultaneously with ChatGPT. And so it wasn't like ChatGPT created the environment for which it was the transformers and the diffusers, the diffusers, the diffusion models and the transformers created both opportunities, and they pretty much came to these things separately, although there were certainly, what do you want to call it? There was studies and reports in the literature that were showing what the future looked like. Developed originally for language translation, the transformer architecture can now help robotaxis navigate intersections. Likewise, developed originally to translate text into images, diffusion models have become essential to autonomous driving. From this case study, their own, the one that they've created, we conclude that novel neural network architectures and techniques in software built for particular use cases could apply to other domains. According to our research, neural net performance per dollar spent is likely to improve 4 times per year. 4 times every single year. It's going to get that much faster, that much better, and create that much more activity, increasing the likelihood that robotaxi networks will reach scale and generate 30 trillion in enterprise value that we anticipate. 30 trillion. There's no enterprise in the world right now worth more than 3 trillion, roughly 3 trillion, let's just say roughly in the ballpark of 3 trillion. And she's saying the robotaxi network alone will have an enterprise value of 30 trillion. I don't know if that's absolutely 100% going to happen, because there's a lot of things that you have to conclude in terms of how many people actually use the robotaxi network worldwide, and she could be off by an order of magnitude, and it would still be huge. If just the robotaxi network was worth 3 trillion or 5 trillion, it would still be massive. The least developed work at this point is also what they give the highest score. This particular least developed work, they are not giving much of a score at all on the robots, but they say the robots is the highest thing that's happening. And so they give convergence score highest, A robot that can speak and understand natural language instructions is more useful than one that cannot. Less obvious, though critical to understanding how closely AI and robotics are entwined, the same architecture advances in AI models that enable natural language understanding can also increase the robotic capabilities. Neural networks should increase the total addressable market of adaptive robotic systems by an order of magnitude or more. Now, once again, this ARK Invest has not done the deep dive, at least that I've seen, on the robotics. I think they're working on it. I think we'll be seeing it. I have reason to believe that they're going to give us something really significant. But in this particular paper, they end with this. Intelligent devices have evolved because of advances both in power management and computation. We expect the continued advances in battery systems to prove critical for a multifold expansion in the market for intelligent devices such as the robots. Okay, then she goes into advanced battery technology. She gives us a high score as opposed to the highest score for robots. ARK Invest Management's LLC, since its inception, what happened here? Since the inception, when the iPhone's battery lasted roughly 1 day, advances in energy density have tripled the iPhone's power budget, apparently. I didn't know that. Its sensors now sample the environment more frequently. Its camera is more processor intensive, and it can facilitate power-hungry capabilities like streaming video and console quality video games. Battery system improvements have impacted smaller form factor devices even more dramatically. The Apple Watch, for example, did not have the power to display time constantly until its 5th generation. AirPods, a device that did not exist 4 or 5 years ago, now fits in-ear, is not meaningfully power constrained, and generates tens of billions of dollars in sales. We all need our iPods, our iPod. Anyway, we need our devices. Improvements in battery capacity and density should prove critical to enabling further intelligence device capabilities. Advanced wearable devices like augmented reality glasses, as we know, virtual reality goggles, those have been severely power constrained, but it's just going to get better and better. In our view, the adoption of these devices will be limited until they are comfortable and offer more than a few hours of compelling performance. But in the history of battery technology, advances in one form factor have unlocked others thanks to increasing efficiency and productivity. A boom in laptop demand, for example, pushed the cost of lithium batteries down enough to include them in luxury electric vehicles, EVs. Luxury EV demand reduces the battery cost enough to enable mass market EV adoption. And now mass EV adoption should enable vertical takeoff and lift aircraft, VTOLs. And then batteries will, with energy density great enough for aerial mobility, in turn could power augmented reality glasses that are much easier to use. Convergence enables step function improvements in technologies as advances in one technology overcome limitations in another. While the computational requirements of many intelligent devices require more energy-dense batteries, advances in neural nets should lower the power intensity of those same devices. The technologies catalyze one another by penetrating new end markets. One technology can accelerate another's ability to scale. Now she gives a couple of thoughts about 2030. By 2030, autonomous robotaxis have transformed global transport, as point-to-point transportation is available in nearly every country at an average price of 50 cents per mile. Given the compelling price point and utility, robotaxis have traveled 13 trillion vehicle miles and are gaining traction. Autonomous robotaxi platforms charge platform fees or take rates about 50%, plus generate 50% operating margins, and give asset owner operators the opportunity to generate reasonable rates of return on capital. Are any of you, let me know in the comments below, are you planning to be a robotaxi owner? Will you have a fleet, even if it's only 1 car, 2 cars, 3 cars? I mean, 1 car might be bringing you in $30,000 a year. Would that be useful or helpful? The number of autonomous vehicles facilitating this travel is 100 million, and most of the incremental vehicle production is autonomous capable. As ridership shifts to electric autonomous platforms, the number of autonomous capable EVs sold annually is 74 million, accounting for most of the automotive market. At an average selling price of 20,000, EV manufacturers generate 1.4 trillion in annual revenue, 20% gross margins, and a 10% EBITDA. With manufacturers consolidating margins increasing, batteries account for 20% of the value of EVs. And much like that of EVs, battery manufacturing is capital intensive and low margin. Supplying the EV's OEM battery manufacturing supplying the EV OEMs, battery manufacturers generate revenue of 300 billion per year just in the batteries. And then stationary energy storage requires a volume of batteries roughly equivalent to that consumed by EVs, generating another 300 billion in revenues. So there's way more to this report. As I mentioned, I will put it in the description below. I'll give you the link, and you may want to sign up for her newsletters. You expect to receive something every week, maybe 2 times a week. You'll get something from them with regard to their products and with regard to the kinds of things that they're doing. I find a percentage of them fascinating, which is why I just gave you this review. Anyway, I hope you found that interesting. Please like and subscribe and notify. Later tonight, of course, we've got the Monday morning show. And on the Monday morning show, we're the only folks. We are all by ourselves. Nobody else does this. Nobody else does anything like it. In fact, we do it kind of every night with our good news Monday, Tuesday, Wednesday, Thursday, Friday. We are the only ones who look at the overall economic situation. We take the overall economic situation, all the studies that are being done, all of the reports that are coming in from government agencies and other people that do various indexes. We look at the stock market. We look at all of that. We look at how the economy is impacting the stock market. Then we look at how the economy and the stock market are integrating with what's happening at Tesla. How is Tesla doing fundamentally? How will that affect their future based on these economic conditions? And then we look at the stock price of Tesla in terms of all of the above. Nobody else. Tell me, who else is doing that? Only we do that. And we bring in amazing guests every single night of the week who have their own special way. A couple of them are special, that their whole career is based on investment advice. One of them is a significant C-suite guy who has tremendous understanding of the automobile market, in particular in China. So that would be Jeff Lutz. Then we got Larry Goldberg, and we've got Bradford Ferguson. We got Nicholas Gibbs, and then more folks in the middle of the day helping with some of the same kinds of things. But the Monday morning show on Sunday night, that has been one of the highest ranked shows from the very beginning, because we lay out the next week in terms of expectations and give you some analysis of that, not just, okay, here's what's going to happen. Next week, the Fed is going to speak. No, we don't say that. Here's what we think the Fed's going to do. How is that impacting this? All of that stuff, and you get it for how much do you pay? Oh, you pay by watching and by subscribing and by notifying. But if you really, really, really want to help, and this stuff is beneficial to you, and you find value in it, and you want to say, Randy, thank you for spending well over 40 hours a week preparing this show and putting it on every night, then you could do Patreon, and that would be a really, really big help. $3, $5, $10, at any one of those levels. The $3 level, you get nothing. $5 level, you get one of the 2 books that you see on the shelf up there in an ebook form, so you can listen to it. Not an ebook form, I'm sorry. Is that right? That would be anyway, it's the audiobook form. That's the word I'm looking for. And then if you do get to the $10 level, you can have both books, or you can have one of those Cybertruck bottle openers, either one of those that you would like if you join at the $10 level. So just would appreciate a few folks doing that. Thank you so much. We've already had quite a few in the last week. We've all of a sudden had a run, several people joining up. We could use a lot more to help support the show. All right, that's all I got for you tonight. Look forward to seeing you. I'm doing this tonight. Anyway, You know how it works. But we'll see you on the Monday morning show in just a little while. It's been great talking to you.